Good morning and welcome to the ADS Securities Markets Update. The first day of the week came in with no economic releases from Asia or Europe, while there were only two economic figures from the US. However, the FX market traded within a medium range yesterday, while the global equities had also a notable rise across the board, as the hopes are rising right now for a Greek deal this week, according to the European officials. The Greek deal right now is a matter of time, and we believe that it should be announced before the end of this week, or at least before the end of June next Tuesday, which should end the market uncertainty mood and switch back to the normal conditions, awaiting for further economic releases. But in the US yesterday, we had two economic releases which also came in with mixed outcomes. However, first of all, the Chicago Fed activity or economic activity index unexpectedly declined towards 0.70 or minus 0.17 in May, despite the fact that estimates were to rise again by 0.12. Moreover, April's reading has been revised lower to minus 0.19 instead of minus 0.15. And this is also the fifth monthly decline in a row and the longest declining streak since 2009. The existing home sales also came in much better than expected, rising by 5.1% in May, while the estimates again were to rise by 4.4% only. Moreover, April's reading has been even revised up slightly toward minus or to a decline of 2.3% instead of a decline of 3.3%. As for the Asian session, today, there were also a few economic figures from Australia, Japan, and also China, which had a notable impact on the market during the session. Beginning with Australia, the quarterly house price index slowed down to 1.6% in Q1, down from 2% in Q4 of last year, while the estimates also were to rise toward 2.2%. Moreover, in Japan, the final manufacturing PMI came in or has been revised sharply lower and showing a shrinking or an unexpected shrinking in June, declining toward 49.9 compared to 50.9, while the estimates were to be revised slightly lower toward 50.6 only. Finally, in China, the HSBC manufacturing PMI also came in slightly better than expected, but remained below the 50 key level, rising toward 49.6 in June, up from 49.2, while the estimates were to rise slightly toward 49.4. As for the European session ahead, there are many economic figures will be released, including the manufacturing and the services PMI across the euro area, including France, Germany, Spain, Italy, Greece, and also for the eurozone. And most of the estimates are kind of encouraging, hinting for positive outcomes in June, which is likely to have also a major impact on the market ahead of the US session. Going forward to the US session today, also another collection of economic figures will be released today, including the durable goods orders, house price index, the manufacturing PMI, and new home sales, and finally the Richmond Fed manufacturing index. However, all of these figures are expected to have a notable impact on the markets, especially if they come in with positive or negative surprises. The durable goods orders are expected to decline for the second month in a row, declining by 0.6% in May after declining by 1% in April. However, the core durable goods may rise by 0.6% after declining by 0.2% during the same period. The house price index also may recover again by 0.5% in April, comparing to a rise of 0.3%. Manufacturing PMI also from Market Institute is expected to advance again to 54.2 in June, up from 54, which would be also the first monthly rise after 2 months of consecutive declines. The new home sales finally may also rise by 1.2% in May after rising by 6.8% in April. However, this might show a higher reading after the existing home sales data yesterday. Finally, the Richmond Fed is expected to recover again toward a 3 in June, up from 1 in May, which would be also the second positive reading in a row and the highest reading since January of this year. These are the fundamentals for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and technical analysis. Thank you for watching. I'll see you once again tomorrow.